We are up and a running. What is up, ladies and gentlemen? It is Financial Friday. Favorite day of the week. Yep. Switch it up on you. That's how we do. It's a great day. It's sunny. It's warm in California. Not too windy. Life is Gucci. And it is my favorite time of the week with my guys. What's up, gentlemen?
What up? What
Man,
up?
what's up, man? How goes it? G, what's going on?
It
What's up?
goes.
It's good to see y'all, man. You talk about that sunny weather. I've been running all my appointments out back today.
Oh,
Enjoying
Yeah,
it's
some
been
yeah.
looking beautiful out there. Yeah, yeah.
Dare I
This is
say,
what they
living.
tell me. I pay all this money to live in California for. I don't believe them, but whatever. Anyway,
It'd be like that. Dare I say, living the dream?
yeah, yep, 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 yep.
Yep. But hey, we're gonna get into it, y'all. Hey, as we start out, for those of you who are joining us for the first time, we couple ways that we operate here. First of all, anything that we say is strictly our opinion. Okay, don't run off and sell all your stocks or sell your house or buy a house or do this or do that and be like, oh well, Jeremiah, Glenn, and Cam told me to, so that I'm supposed to do that. Nah, we're strictly giving you guys our opinions. Please do your due diligence. We do this so that you can be more educated as you do that due diligence. You do your research, you learn more about what's going on. Second thing, every week we take turns picking articles. So every week, one of us will pick 3 articles to discuss based off the current market, housing, crypto, real estate, whatever we decide. And ultimately, that person is going to tell us why they chose those articles, and we're going to have a discussion about it. This week is Jeremiah Ramirez, the man, the myth, the legend. He picked the articles this week. So as I pull them up, Rico, please let us know kind of your methodology on why you chose what you chose.
Cool. We can definitely do that. Super excited about getting these articles to you guys because usually you guys know I'm a super technical person, so I'm going to be choosing a lot of stuff with some numbers and some things that you can basically take. And as my man, in the words of my man Glenn, have some practical knowledge. You can take those numbers and go and apply them to whatever it is that you're doing, whatever industry or whatever you got going on. So to start off, we're going to be looking at the housing market. All right. Let me see here. I gotta. Oh, there we go. Perfect. So the mortgage rates increase after weeks of decline. So that's bad news, right? That's bad
Just
news.
so you know.
I'm just saying from the let me just start it off and just go ahead and say that it's bad news. Now, why is that bad news? Because buyers are in the market for a month-long decrease since mid-March. What we've had is the rates of houses have been going down, the interest rates, right? Which what are we looking at? We're looking at the 30-year rates, right? 30-year
Yeah.
mortgage rates, and so that's dictating, and it's a huge indicator of not only the economic health, right? Or stamina in the U.S., but it's also a good indicator about where we're headed, right? Like,
Yeah.
what's the future? Not just where we are currently, but what are we looking at in the future? Because the housing market is usually, they say, 3 to 6 months behind the stock
Hmm.
market, or in this case, it might be before. We'll see. We'll see which way it goes. Um, so yeah, we went from 6.27 to 6.37 in just a week, right? And so that's bad news. Why? Because the people that were in the market and they were looking to actually purchase some homes, they're getting out of the market now because they're like, all right, here we go again. Right.
Yeah.
I'm not looking to put money into a home and I'm going to have to pay outrageous rates and interest. And then they're sitting there and they're probably having conversations with their uncles or aunts or somebody who told them, yeah, I got 2.9 in 2021, and they're just like, what am I doing? Like what where are we at right now? So
Yeah.
affordability remains a primary concern this year as well as it was last year, but it's super huge this year just with the recession lingering and all the talks and all the rumors of the finances.
Hmm.
Uh, what they said was the volume of purchase applications decreased by 10% from a week earlier. What does that mean? That means less people. We have 10% less people that are putting houses under contract. They're
Yeah.
not purchasing. It's 10 less people, 10 less percent of people, excuse me, 10 less people. We wish 10 less percent of people overall. And over the grand scale, as you scale that across the United States, that's a huge number, right? That's a
Yeah.
lot of people. That's a lot of homes that are not going in the market. Overall purchase demand was 36% lower year over year. Okay. That
Mm.
means this time last year in 2022, even with things were going on, remember we were early in 2022, right?
Yeah.
There were 36% more people looking to purchase homes. So this is bad. We're going in the wrong direction. Here's
No
what's even
bueno.
crazier. So they said, so usually you guys know, obviously sell and demand, right? We supply and demand is what people always think about. And
Yeah,
so if there are a whole bunch of homes, the prices should drop, right? It's a surplus of homes,
correct.
prices should drop. Okay. So if there are not that many homes, the prices of the homes should increase, right? Does that make sense? And
Right.
yeah, kind of, right? But that's not how it's working. So why is it not working like that? The reason why there's not a whole bunch of homes that's in the market, it's because people that would be selling homes, they see the interest rates increasing, and so they're hanging on to their homes for two reasons. Number
Yeah,
one, I don't want to be out in this market and get a higher interest rate than what I refinance my home that I'm staying in right now for. This one might
yeah,
be paid off. I got equity in this house, right? Maybe I should just take a HELOC and call it a day. Get a loan out from from my equity and call it a day versus me trying to get back out into the housing market. Number two is I don't want to have my home in a market and then it becomes a stale market, right?
yep,
Is what happens. My home stays in the market for an extended period of time, and then people come and the asking price. I can't hold a firm asking price because when the buyers come, they're going to say, "Dude, your home has been in the market for 6 months. It's been in the market for a year. You got to
yep,
just take what you can get. I'm going to offer you 50K lower than asking, and this is what you're going to take." And you're like, and you probably take it, right? And so those are the two reasons that they're trying to avoid. You want to sit back and just kind of see what's going on right now. Even
yeah,
people that would usually have no issues getting loans, this is another reason for the housing market being where it's at. So higher end qualifiers, right? Great credit, everything like that. They're still finding that actually securing larger end loans, so that 850 plus range, or we could even
hmm,
say 750 homes plus range. Um, the
nope,
lending for that money has been stricter. So
yeah,
I'm not getting that money as easily as I was, right? And I have great credit. That's what these people do. Like, hey, I got great credit. Okay,
yep,
got it.
Mhm.
But I'm not getting the money in order to get my home. It's there's a lot more limitations. There's a lot more stipulations to me getting that loan. And so, you know what? Maybe just isn't the time for me to do so. I don't want to go through all the red tape and jump through all the hoops and everything.
yeah,
Yeah.
That being said, 30% of builders, right, for homes, they actually lowered their prices in April for the homes that they're. So you're seeing this all across in every single piece of the industry, in the real estate industry. 59% of builders are using incentives to draw buyers in. What does that
Mhm.
mean? That
hmm,
means that their overhead is actually increasing. And so what? They have to drop the prices, or they'll try to raise the prices by putting it into the cost of the home, but they can't do it because the
yeah,
housing market being what it is, they're having to basically lose additional profit, not only in the asking price, but they're losing money because they're giving out incentives, right? They
Mhm.
yep,
have to give out 3 months of no mortgage cost. They have to give out whatever it is that they're giving, right? Lowered interest rates when their national interest rate is much higher. These are the things that are going on with companies. And so you see a whole bunch of people that are just trying to figure out exactly where the housing market is going. You thought it was going in the right direction. Yeah, it's not so much, right? That is why I chose this article. Phyllis, what's your take on it?
So, first off, for anybody who, and this is something, when it comes to the housing market, anybody who is relying on selling their house as their retirement plan, please call one of us. And I say that because that is something that I ran into when we were looking at a house, right? Is, we found a property, we offered a fair price. Um, and at the end of the day, he didn't take it. And come to find out, the whole had first of all had been trying to sell the house for over a year, had knocked down the price consistently every single quarter because obviously no one's going to pay that price for your house, and didn't take it. Got greedy, right? It's like, no, I'm not gonna put a clause in there that says I'm not gonna take if the house doesn't appraise for whatever you guys offered, right?
Right,
Right.
right.
Which means your house is overpriced. Come to find out, unfortunately, he didn't have any money for retirement. So he was literally hoping to sell his house so that he could get out of there
Wow.
and then move on. And the crazy thing is, that is not as uncommon as you might think, because and these are not things that you can time, right? Like how real estate, don't get me wrong, not it can be a great investment, but it can also be like the worst investment you ever do if you don't know what you're doing, all those types of things. It's not just like, oh, buy a house and I'm always going to be okay. It's 100% now. We talked about this, when we all met up a couple weeks ago. So in general, I mean, this is a perfect scenario of, one, the American dream is dying, honestly, in the eyes of a lot of people, because the whole like get a job, buy a house, retire at 50, 60, whatever, and have a pension. That's not normal anymore.
Do you think that's the American dream? No, that's not my dream.
That's what was stated. That I think that's what like.
But who was that stated by? That ain't stated by us.
Not by us.
65, 70-year-olds like that.
Oh,
that's not
the boomers. The boomers. But when you look at a lot of people, like I would say probably not Gen Z, but when you're looking at anything from Gen X lower, there's still I know a lot of like people I know are still holding on to that like somewhat dream. And so that's what and those are people that are realistically are hoping that they were in a position to buy a house at this age. And they're not. So and this is just another one of those indicators.
Yeah.
What do you think, Jim?
I'll say I'll kind of go backwards. You kind of left off talking about how like at least 30% of builders, have reduced their home prices in April, but they're adding additional features, to that. The good thing with that is that like if you're able in a position financially to buy or invest, 5, 10, 15 more years down the road, like it's a great investment for you, right? And so that's on one end. On the other side of it is that a lot of people don't fall within that category, right? And so, which is again one of the reasons why we do this, to try to educate folks to do that. You talked about the purchasing apps declined 10% from just a week ago, and then I think you mentioned this too, how just last year, and it was talking about this in the article, last year is 36% lower than a year ago, right?
Yeah.
Which is crazy. Just to kind of think of, because there are a lot of people who are still having conversations like, hey, I want to buy a home. Either they can't get approved for a loan, or the interest is just too much, for them to even take that step. And Cam, can you do me a favor? Can you go back to the graph? Can you bring that graph up? I was sitting in the backyard earlier. I was reading this. I had Olivia in my arms, just kind of reading through it. Baby girl was kind of
the graph.
Yeah, I think
right here.
That one. So I was looking at that graph and just kind of looking at the ups and the downs. And when I was looking at the graph, I remember we purchased this house 2018, 2019 that we're in. And so when I was looking at the average rates, I was thinking about like what was the mortgage rate when we purchased our home.
Yeah.
And so it was 4.9. It was 4.8% that we purchased a home, and then a couple years later we refinanced, and our mortgage rate is 2.7.
Yeah.
And so when I was reading this and it was talking about just kind of highlighting what the mortgage rate is at right now, I was just like, man, this is crazy. Just kind of seeing where that dip was in this particular graph.
Yep.
So so anyway, one to kind of highlight that. The other piece, a couple of months ago, I think we were talking about the housing market, and Jeremiah, I believe you mentioned about Freddie Mac.
Yeah.
And I've had someone or a couple of people on the back end say, hey, what is Freddie Mac? What is Freddie Mac? So this is just for everyone who may not know what Freddie Mac is. As far as education wise, is so Fannie Mae and Freddie Mac were actually created by Congress. But regarding the financial system, they perform an important role in the nation's housing financial system, right? To provide liquidity, stability, and affordability to the mortgage market. And so I wanted to kind of end off by leaving that with our viewers, just to kind of tap that in. But those are my thoughts on this particular article. I enjoyed the read for sure, because it made me kind of go back to when we purchased our home and when we were looking at mortgage rates. And at the time, I was not as educated on how the housing market worked. And so, like I said, I wanted to kind of leave that with the Freddie Mac.
Hey, at the end of the day, I'm gonna tell you like this: if you're not in a position, I'm probably the wrong person to talk about with real estate. My mom was a real estate broker. Real estate's trash in a lot of scenarios. I'm just keeping it honest. I mean, it's great in its purpose. I think that's an error. This is my opinion. Remember, that's an error that is fleeting. It's leaving. it's time to kind of upgrade and understand. You're not like we got to upgrade. Like I've told people a lot of times, people come to me all the time, oh, he purchasing homes, and then I'm like, dude, I like being liquid. In a sense, right? I want to be able to have my money and move it to wherever else I want to move it to. Like I don't want it locked up in one particular, like I said, I was asking Cam, who said that's the dream? I don't think that's millennials' dreams. I think we're currently just destroying what you thought, and our parents and our aunts and uncles are like, well, you need to do this. And yeah, that worked back in the 80s and 70s. It doesn't work anymore.
Yeah.
So we don't want to do that. What we want to do is start to shift and be smarter about where we put our money and where we're, investing our years and our time into. So for me, real estate's cool, but I know we got to move on. This one is a good article. You could dive deeper and deeper and deeper into this.
It was.
It's all right. So the next article is our Tesla article. So Rico, please let them know why you chose this, and then we'll get into it.
I shouldn't have to explain this, but
I mean,
I will though. Elon Musk is a polarizing figure, but I love him. He's like my spirit animal because he says the stuff that I probably wish I could say that I don't get to. And I know his Asperger's probably has a big piece to do with that. I wasn't diagnosed, but I think sometimes I feel like I got that too because I really don't. Anyway, that being said, Elon pushes it out there. Now, we did an article probably about 2 weeks ago where we talked 2 or 3 weeks ago. We talked about him moving over into China and taking a trip. I think it was my last time up 3 weeks ago. We were talking about him taking a trip to China, right? So as we look at that, Tesla, Elon actually within himself lost $13 billion from his net worth. But how did that happen? 13 billion. Now, obviously, for all of us, that is semi-suicidal type things going on. But for Elon, that's a normal day. He'll get it back tomorrow. So Tesla's quarterly profits returned weaker than expected, right? So the stock dropped 9.75%. So with him having quite a bit of his money inside of Tesla stock, right? Obviously, he's going to take a hit to his net worth. That's hitting a 3-month low, right? It hit dropped 9.75%. That's a 3-month low. So here's a big problem. And I remember we talked about in that article 3 weeks ago, him going to open up a very large facility in China and that relationship and him saying, well, I'm a capitalist. I got to go get my money how I get it. Right. Yeah. America has its rules and things that's what you have going on, but I'm not the government. I'm looking to I'm a capitalist, right? I'm looking to make my money. And so let's talk about this. The growth margin actually came in at 19.3%. It was short of what was expected at 20.7%. What is gross margin? Gross margin equals the revenue that a company has minus the cost of the goods sold, right? The cost of what it actually to make whatever it is that they're doing, right? The cost of material divided by the revenue. Okay. I know I'm a math person, but what that means is I'm getting the gross, the overall cost of my margin. How much am I making? Right. So that's what I just want to throw that out there because people are like, what is gross margin? They put a lot of supply. If you read down in the article, they said they put a lot of supply that actually needs to find a home. Right. And the only tool that they've actually had is cutting the prices of their vehicles, cutting the prices of their stock or their shares as well, right? Hoping that they don't split. You go further down in the article, it's giving some information. Most of it is about Tesla, but you'll see some stuff about AT&T lost 10.45%. It was the biggest loser in the S&P 500. That's very big. Its revenue is down 20% year over year. American Express fell 1%. As they missed the expected cost per share estimates. And then you had, what was it? There was a saying, and I'm going to look it up, but it was the burying the cost. Can you find that, Cam?
Yeah, one second.
It's at the very end. Let me see.
Bearing a sharp backup in mortgage rates. Resilient demand should keep a
sharp backup in more. Okay, yeah. Resilient demand should keep a floor under sales. With the mortgage application data point for March already consistent with an increase in sales in April, Nancy Velden-Houghton, lead U.S. economist at Oxford Economics, said in an email. Further ahead, however, We think home sales may come under some renewed pressure as the economy heads towards a recession. I put this article in place, right? Because we just read about the homes. So you
Right.
see how everything's interconnected. Now, to finish this off, because we got 10 minutes left, but here's a question, guys. I'll just say this. Was Elon's most recent visit to China, did it have a lot to do with their loss of revenue?
Good question.
I don't know.
Just something to think about. I just want to throw that out there. You know, just a little something.
Potentially SpaceX too, no?
I agree. But that was later. That was later though.
It was. But maybe anticipation though. You know, I know funny enough, I saw a lot of people who had opinions on that I had never seen have opinions on that type of stuff before.
I think it's just people trying to have opinions just wanting to have opinions. Any guy that's been the richest man in the world and plans to live on Mars or something. I don't know, man. I don't know how you have too much of an opinion of that, but anyway.
Yeah, I will say if we have any of our viewers or listeners that are Tesla investors, I would love for them to comment because I would just want to read like what your thought process is, you know, with everything going on with Tesla, the stocks going up and down, mainly down. I'm really, really curious. One of the other things that stood out to me in this article was talking about casinos. I was thinking about Las Vegas. I was talking about the casinos are up, right? And I was just like, I wonder, you know, with so many people living check to check, with so many people, finances are not where they were in 2020, you know, versus where they are now. And with the casinos being up, I was like, I wonder how many people are still going to the casinos, you know, even with the same thought as far as like buying lottery tickets.
Yeah.
Like how much is being invested from you and your household into the casinos, into the lottery tickets. So that's kind of where my mind went. You know, that ADHD was kicking in. So I was,
now, whatever that number is, the question is would that same percentage invest into a product that would actually substantially solidify their finances versus the women of hope and a dream?
Yeah. Mm-hmm.
Yeah. I think it kind of goes with just kind of wanting the end result, you know, but not wanting to learn about the process.
Oh yeah. People as a society, we've gotten too comfortable with hearing about these gigantic wins or like 50% gains, or you post something and all of a sudden you go viral and you're a millionaire. Like no one understands the premise of either compound interest and honestly just little bits over time. And I've noticed that more and more when I talk to people. Is I'm like, oh, you're putting money. I talked to someone yesterday, and I was like, oh, you're putting money into this. And I said, have you moved the funds around at all? Because that's actually where this tool becomes a realistic retirement. No, I don't even know how to do that. And I said, oh, so you're putting money into something that could potentially be good, but like you're saying, is no one's educated on you how to use it. And they're like, well, yeah, I mean, and honestly, even if they did, I probably still wouldn't know what to do. And I was like, great. But that was a building block. Like, I was like, now that you understand that, that's what I'm here for. You keep doing your thing, I'm gonna do my thing.
For sure. I had a similar conversation with a client last night, but yeah.
We have a lot of similar conversations.
Yeah.
All right. So final article with 6 minutes to go.
All right, we're gonna run through this. This was just an overview. Stocks edge higher as traders weigh in earnings. The PMI market wraps. It started off talking about the S&P and how it swung. It gave a couple quotes. I'm going to go through the highlights for this, guys. Let's start off with the corporate highlights. Tesla Inc. increased prices of its Model S and X vehicles in the U.S. after steep markdowns early this year took a toll on profitability and the car maker shares. We just talked about that. See how everything goes.
I got a buddy who that hits so hard because he recycles Teslas. Like he buys them, resells them, all that, and then bruh.
Bad business. Regional Financial Corp reported a drop in total deposits for the first quarter, 129.04 billion. Procter & Gamble Company, which is basically every household cleaner, napkin, everything you have in your home, raised its sales projection for the fiscal year ending in June, citing higher prices and slight increase in demands for some of its products. That makes sense. People started to stock up a little bit, right? SLB, the world's largest oil service provider, posted its best first quarter profit in 8 years. We talked about commodities. I've been on people's heads. People say, "Oh, you don't know what you're talking about." All right, keep playing that game. I'm trying to tell you. Freeport McMoran Inc. churned out more copper than expected in the first quarter in a boost to tight global supplies, although the top publicly traded supplier trimmed annual sales guidance. Again, commodities. People, you can't go wrong. Put your money in some commodities. I'm telling you, look it up. I'm just trying to help people out, man. Some of the main moves in markets. So let's look at the stocks. The S&P 500 was little change as of 4 p.m. New York time. The Nasdaq 100 rose 0.1%. The Dow Jones Industrial Average was little change. MSCI World Index was a little change. Now let's look at the currencies. Bloomberg Dollar Spot Index was not really changed. The Euro rose 0.2% to 1.099. That's bad news for the dollar. Yet again, we spoke about this earlier. That's horrible news for the dollar. You don't understand why. Review some of our previous episodes, guys. That's bad news. The British pound was little change, but it said 1.244. What does that mean? That means for every 1 British pound dollar, you're paying $1.24 of American dollars. Not good news. The Japanese yen rose. More bad news. 0.1% to 134.08 per dollar. Cryptocurrency. Bitcoin fell 3.3% to 27,000. Ethereum fell 4.9% to 1842. That is because Fed now. Anyway, that's a whole nother subject. You crypto people better get your stuff together. That's all I'm saying. Get your money right. Bonds. The year 10-year treasuries advanced 4 basis points to 3.57. Stable money. Germany's 10-year yield advanced 4 basis points to 2.48. Britain's 10-year declined 1 basis point to 3.76. That's good news for the dollar. My favorite, commodities. West Texas Intermediate crude rose 0.5% to 77.76 a barrel. Oil churning out money. Black gold, Texas tea. Gold futures fell 1.3% to 1993.20. What does that mean? $1,993.20. Guys, I'm going to go ahead and tell you this. Commodity wise, go get your palladium, go get your platinum. Stock up on gold bullion. Go stock up on physical gold, silver.
Facts.
Commodities is the game. Get your copper, right? Go buy some oil. That is it.
Rico, let me hold a bar, Rico.
Go ahead.
Let me hold one of them gold bars.
Let me hold a bar.
I'm trying to get some from Cam. Cam got all the gold bars.
I got some gold.
Yeah, weren't you guarding Fort Knox, or was that G that was guarding?
That was G.
That was G. Okay.
I was what?
I don't know.
Fort Knox. You guarded Fort Knox.
It just sounds fun. It just sounds fun to say.
he's like, don't tell people that.
Don't tell people that. Now people are gonna show up on my door. But where the bars at, bruh? I do know someone that actually really did work at Fort Knox.
Wow. That would have been an extremely fun job. Just gold everywhere stored, which is weird because
all the buildings are made of gold.
Right. It's illegal. Anyway, it's a whole guys. That was the rundown for the week. Anybody that's looking at this, I want to get you guys, just like G said, get your questions, get your comments in. If you're deep into Tesla like myself, Elon drives me crazy. Super inspirational guy, but man, he's killing my stocks. His sporadic behavior. Get in here, give your questions, get your comments in, and get you some commodities. And don't buy any houses. That's my final words.
See what you got. You got 1 minute.
Hey, Rico hit a lot of what's kind of stood out to me in the article. I will say, like, when I read about the bonds, it was, as I read the article, it was just like decrease failure. We got to commodities and bonds, and it was just like increased. So Anyway, man, yeah, looking forward to the feedback that we get, the questions that we get, the comments that we get. With that said, man, that's all I have.
Bet. All right, y'all. Hey, we appreciate you joining us for another Financial Friday. Every Friday, 3 p.m. Pacific Standard Time. We are here for 30 minutes. Like, share, love, just like we tell you all the time. And we will see you guys next week.